And so Ford, and we have the same issue with GM, essentially lose a tremendous amount of money on each EV that they sell, which basically means that their prices are not competitive for what their product is actually worth. Tesla has cracked the code much better and makes money on selling EVs.
And BP is also now taking that dive. They are in a contract for $100 million worth of Tesla ultra-fast charging stations, and that's going to be deployed here in the United States.
It appears that General Motors and the United Auto Workers are moving close to finalizing an agreement.
All that and more. So let's get to it. Tesla stock is currently up in the after hours, sitting at $207.68 per share. The stock pretty much traded sideways with epic volatility in between, down about almost 3% for the week. For the month, a dismal 14% decline, 20% if you go back 90 days. Year to date, we're still sitting above 75% gains, and going back an entire calendar year, we're down almost 8%. There's no guarantee which direction the stock market will go, but there is one thing for certain. Incredible volatility will follow in its wake.
Let's break it all down with Deutsche Bank's Emmanuel Rosner. He has a sell rating on Ford, a hold on GM, and a buy on Tesla. Let's start with Ford. Emmanuel, you question the EV transition. You say it's considerably slowing down. Anything you heard from the call, for example, to give credence to that view?
Yeah, absolutely. Good morning. Yes, so the EV strategy is absolutely slowing down. Essentially, Ford announced yesterday they are delaying $12 billion of planned EV spending indefinitely, potentially even raising the possibility of canceling it, essentially saying, look, the economics are not working right now. The demand is not really there for our product. We're going to slow down the spending, the investments in batteries, in vehicles, in plants. We're going to slow it down, see how we can, fix things, and then reassess this down the line.
Well, that's a catch-22. The only way that you're going to be able to improve the functionality of your battery electric vehicles is to increase the production. Here's a crazy thought. The more you do something, the better you are at it.
So our view is this is, considerably off track. They reiterated midterm targets for EV, but how could you have confidence on midterm targets when you don't really know what's going on right now? So I believe Ford is deeply off track on EV.
All right, well, what does that mean for GM and or Tesla? I mean, are we sensing that there's an overall slowdown in demand, or is this specific in some way to the expectations for Ford products?
A little bit of both. No, not specifically Ford, but there is an overall slowdown in EV adoption. I think that this is a lot of the early adopters have already bought their EVs, and then the next wave of buyers are basically saying, look, I'm not paying a premium for the privilege of driving an EV. So EVs are essentially expensive for what they are. They sell at a premium to ICE, and that's, I think, basically limiting this adoption curve from, rising as fast as people essentially expected. So this is an issue for basically everyone. But the traditional automakers have had a very hard time being able to come up with a cost structure that enables them to sell the car at the right price. And so Ford, and we have the same issue with GM, essentially lose a tremendous amount of money on each EV that they sell, which basically means that their prices are not competitive for what their product is actually worth. Tesla has cracked the code much better and makes money on selling EVs. They're facing a more difficult macro backdrop. But for traditional automakers, we're incredibly cautious on their success in EV.
And rightfully so. The success of any legacy auto manufacturer when it comes to battery electric vehicles is going to be slim to none because their attention is divided. When you look at your earnings report and you see a majority of your income comes from internal combustion engine sales, you're going to want to prop that up. And when you go further down on the balance sheet and you see the loss that has incurred with your attempt at battery electric vehicles, the thought might pass in your brain, the juice ain't worth the squeeze. But if you entertain that thought, your will be bankrupt by the end of the decade.
What about this tentative deal with the UAW for Ford? How does it change your numbers and their overall competitiveness?
Yeah. So the deal with UAW is probably going to add about $1 billion of extra labor cost a year, starting as soon as it gets ratified.
Damn!
Ramping up to about $2 billion of extra cost a year by the end of the contract, because there's some escalation in there. So,
damn! I'm sure there's nothing to worry about there. Ford's market cap is really low right now. I'm sure there's some opportunity. Maybe? No? Oh, okay.
This is makes them even less competitive in terms of labor costs. Obviously, GM and Stellantis will have similar conditions, so no difference there. But certainly versus a Tesla or another newcomer, it's also only one of the multiple headwinds we see to Ford and GM's earnings as you move into next year. You have these higher labor costs, which are meaningful. You have vehicle prices, which are starting to come down, and as we just discussed, EV losses deepening, and essentially the success of EV becoming further and further out, if ever. So to us, it feels like earnings are about to take a real meaningful step down as you move into 2024.
There will be a particular peaking of the legacy automakers in earnings. Once they cross that Rubicon of decline, there'll be no going back.
Time to discuss some Tesla, of course, we try to do nearly every single show, Jenny. But this is, Tesla is just sort of involved in this story, I would say.
Yes, so Tesla's, a part of the story because this has been an ongoing story really with Tesla expanding its charging infrastructure, but BP, pretty major customers. So here to tell us now more on what this relationship will look like and what this really means for Tesla, I'd like to welcome in Kevin Green, Senior Markets Correspondent here for the network. So Kevin, we are seeing Tesla down today about 2 3/4%, but this I objectively saw as good news.
Yeah, definitely. And actually, this is going to be a revenue driver potentially for Tesla in the future. We've kind of actually talked about this strategy as far as trying to expand their supercharging networks. And BP is also now taking that dive. They are in a contract for $100 million worth of Tesla ultra-fast charging stations. And that's going to be deployed here in the United States. It's actually going to be on an independent network. It's BP's Pulse network. And this is an initiative that they've actually put into place where they plan on spending $1 billion in the United States for charging stations by 2030. So this is kind of the initial phase of this overall rollout strategy. And once again, it's going to be on an independent network here. But once this is actually up and running, this could actually give way to other competitors within the space that would like to build out this strategy. Obviously, BP has a wide range of networks when it comes to gas stations, retail gas stations, things of that nature. So they plan on trying to roll out these particular charging stations in really hot areas when it comes to EVs. And that includes Houston,
Texas, home of the Texans,
Chicago, Washington State, Los Angeles, among others here. So I am actually really happy about this strategy. It's something that is really overlooked when it comes to Tesla in their opportunity to be able to not only command the EV space in general when it comes to cars, which is very cyclical, but also building out the utility network for other competitors, not only just for the car makers, but also for others that are in the energy space like BP, Shell, and some of the other companies that are out there. So this is a really good opportunity for Tesla. Hopefully they're able to capitalize on this moving forward. And you cannot really expand the EV space or sell more EVs if you don't have the charging networks, you don't have the infrastructure in place. This is going to be a key development that is going to probably take off here in the next couple of years.
Buc-ee's, if you're not familiar, Buc-ee's is a very popular gas station down here. Gas pumps as far as the eye can see, and inside you've got the cleanest restrooms and the best barbecue you could have. What if you changed out all those gas pumps for fast supercharging to include the supercharging of the Tesla Semi? A one-stop shop from Houston to Austin to Dallas. Those would be my 3 major locations. But instead of calling it a Buc-ee's, I'd call it a Plug-ee's. It appears BP is taking the first steps in taking my vision into putting it into reality. Again, there's gold in this here transition.
Kevin, well said. I mean, I'm just trying to think. I mean, this seems like a situation that's win for Tesla. You're expanding your revenue stream. You're finding a way to implement that kind of razor blade model that we've heard about. You're also, if you're BP, you're able to play offense at the same time you're playing defense. And if you're a consumer, you got more places that you can actually get access to these chargers. This is one of those things that it just seems like a no-brainer all around, and it's a really positive story. I'm just thinking about, the kind of ancillary effects of where this goes down the road, where gas stations, as we know them now, have potential charging stations as well. I mean, gas stations, at least where I'm from, they're kind of convenience stores. You go there, you fill up your car with some gas, you pop in, maybe you buy a candy bar, maybe you get a Gatorade, whatever it may be. That's all lost revenue if you're never there. And so getting these charging stations there is going to be good for those, independent small business owners that are, own those convenience stores that are associated with the gas stations as well.
Exactly. That's why it's a win-win, Alex. It's going to be able to attract customers, maybe existing customers that are getting into EVs, but it's also going to be able to provide the foot traffic into the convenience stores, which provide higher margins when it comes to their product. Just think about it like this. On the low end of this range here, there's 130,000 retail gas stations here in the United States. That's the lower end. I've saw estimates up to 150,000. So think about that potential there for the independent owners that are out there, as you were talking about, or those that actually command a pretty significant network of gas stations. I mean, the opportunities could be endless, and just think about the infrastructure spend that is going to be out there, the CapEx spend that Tesla could be able to benefit, and not only just Tesla, but some of the other car automakers that are out there that's going to be able to sell their cars a little bit easier, as the consumer is going to have a little bit more peace of mind that they're going to be able to charge all across the United States. So I think this is once again a really great opportunity here. Very small. It's it's in its infancy stages, a very small sliver of Tesla's portfolio, but it does provide potentially some very high margins if they're able to command the space, especially when they command the connectors for these systems as well. So everybody's really adopting them when you're looking at the big three automakers. And so once again, you are able to really expand your brand, not only in the auto space, but the energy generation space. So I think this is a really good opportunity, and I'm glad that they're actually making these type of moves.
Yeah, Kevin, I could not agree more, and I think this just goes to show to the more bullish case that this is not a pure play automaker. This is a company that does so much more, and expanding that charging infrastructure only makes, I think, their vehicles even more attractive given the accessibility this will lead to down the road. I think that's huge for a company that is expanding its footprint. So
that's where all the opportunities went. That guy's been speaking to my cash register, apparently. I hope they're not in a relationship. It would be kind of awkward. But seriously, Tesla as a pure automotive play, that's still really attractive. But when you add in all of the other subsidiaries that Tesla is involved in, batteries, energy storage, supercharging, licensing their software, seems like opportunity is everywhere.
It appears that General Motors and the United Auto Workers are moving close to finalizing an agreement. We don't have anything to announce at this point. Mike Whalen from CNBC.com, matching what we have heard from others at General Motors and with the United Auto Workers, that these intense negotiations really ramped up yesterday. Mary Barra was involved in some of these, as was Sean Fain, president of the UAW. And those negotiations, which went late into the evening and even early morning, are ramping back up today. Don't be surprised if we get some type of an announcement of an agreement similar to what Ford has with the UAW. If we get that either later today, tonight, maybe over the weekend. And by the way, UAW also moving closer to an agreement with Stellantis. So this is the pattern that we usually see, though much more accelerated than what we've seen in past UAW negotiations.
You bet your ass is. This is a symbiotic relationship that needs to get copacetic as quickly as possible. Not only for your internal combustion engine sales, but so that you can transition to battery electric vehicles, or in their case, maybe not. But either way, you need to put this behind you and focus on the years ahead. In conclusion, so many indicators that EV demand is slowing. Tesla had a bad quarter. GM, Ford, they're gonna scale back their EV production. The juice doesn't seem worth the squeeze. Need I remind you folks, this is all short-term thinking. If you're only worried about next quarter, you may just miss the forest for the trees. And Tesla is expanding their supercharging network. BP sees an opportunity to get in on that charging infrastructure. And GM plus Stellantis don't want to be left out in a UAW deal. I fully expect something to get done by the middle of next week. That's all I have for you today. Be easy. Peace.